Good evening, everyone. Time for another silver update. This is the 8-hour chart of silver provided by netdania.com. You can click on the link below. Now, we had a big rally today. I had mentioned on the member site that I had gone long the AGQs, and I think I've got a chart of that here. And this is the long-term chart of AGQ. You have to remember when you're dealing with an ETF, and this is actually an ETF multiplier, that you have serious decay in the value of that ETF. So if you're going long an ETF, you better get the right spot or you're going to get wiped out. Something you can jump in and jump out. But anyway, I did do that just in my Play Money account, and you can see we did have a rally when silver rallied at the end of QE2, and we got a run from 30 to almost 200. So I'm just playing around, betting with that, and you can see that if we go to the 10-day, that we've got some gap opens, and I got in right about where this breakout happened to the upside. So this trend channel that we've drawn here, this shows you the primary trend line. The reason I drew two trend channels is because this was the very dominant trend channel until we broke down through and established a new lower end of it, and then it held fairly strongly, especially with this trend line, which is the one I was watching very, very carefully because it had the most touch points, and you can see when it was violated, that's when we got the big rally. Now, the other takeaway from this is the volume, but before I get to that, I want to emphasize here that when we put this upper trend channel line together with the lower one, so we'll just take out the middle one. You can see that we're actually only about 75% of the way back up towards the top of this trend channel. So we're really still in the primary trend, which is a downtrend. It's just that we were so oversold that this seemingly large rally hasn't really brought us back that much. Now, to get a trend change, according to this trend channel, and that goes back about a year, we're actually going to have to break out above 25. So 25 is going to be a really key level to break out of and sustain above it. And of course, we're going to have the other major, very major important resistance level, and that's going to be 26. If you remember, we tested 26 a number of times, and it took a large number of tests to actually break through that level. So you can see that was the level that the second run of the QE2 took off from, and then it was the level that was tested multiple times before it was finally broken on this spectacular volume. And that's another thing I want you to keep in mind, is the amount of volume here. Now, I'm not going to get into the debate about whether this is contracts or not. Obviously, if that's 20 million contracts, then we're talking about 1 trillion ounces of silver or something like some ridiculous number. But what I want you to notice is that even though we have a recovery back up to nearly the level we were at when that volume came in, we have nowhere near that volume. If we get to the very nearby scale, you can see that there is volume coming in. We've got some after hours volume here. We got pretty big volume on today's breakout. If we pull back, we can see that we have an increasing trend in volume. But if we keep pulling back, we can see that it begins to become dwarfed first by this initial 100,000 volume that we had when this recent rally started, and then as we continue to pull back, we can see that it will just be so dwarfed by the volume that we had back here that it's really not even on the chart. So what does that mean? I really can't tell you. I don't know if that volume is talking about futures contracts churning back and forth, or if there's some spot volume in there. I don't know how they're calculated, but whatever it is, the volume has not come back in with this price move. Now, I wanted to take you over to interview with Howard Davidowitz that was on today and Yahoo's finance channel. Let's listen to that, and then I'm going to comment.
Walmart disappoints Wall Street. The nation's largest retailer coming in a penny shy of estimates, lowering for the full year. The man to my left knows more about retail than any living human being. He's Howard Davidowitz, here to discuss. Let's address this first in terms of what Walmart did. Is the company getting weaker operationally?
No, Walmart is a terrific operator. They didn't suddenly become stupid.
And so how did they miss estimates? If we can't hang this on Walmart,
we've got, out of all the jobs generated so far this year, 75% of them are low-wage, part-time jobs. That puts us in a 14% unemployment rate. That's where we really are. 14% unemployment. We also have 11 million people on disability. Right. That's unemployment forever. That they didn't get disabled on the job. Right. You can't have 11 million people disabled. So the economy is in a state of collapse. That's what's going on.
And there might be a misconception. A lot of folks think that Walmart just appeals to that low end. And so it could be interpreted on the government numbers that that's just a class division. That the poor are getting poorer, the rich are getting richer, and Walmart appeals to the poor class, and this is a function of just them appealing to that customer base.
Well, Walmart has 150 million customers. And I mean, Target has got 50 million customers, and they're going to be negative too. So Walmart is America with Target and everyone else and Macy's. Business is bad in America. Look at our GDP growth. Forget Walmart. Look at the GDP growth of the United States.
Right.
We're growing at 1.5%. That means we can't produce jobs. That's what's going on.
Are we growing at 1.5% though? Because these comp stores, comparable source sales, are what every Walmart does year over year. Just with a little inflation boost, you kind of get a 1% gain on your comp store sales. Walmart, for the second consecutive quarter, showed negative comp store sales. That means that fewer people are spending. Their traffic is fine. Folks are showing up there and they're not spending money. The question is, that GDP number is controversial. Are we negative? Does this mean perhaps that America's in a recession?
I think we're headed into one. I don't think we're in a recession right now, but I think there's a 50% chance we'll be in a recession next year. And the key point on that is that's after spending $7 trillion, printing trillions, and announcing we were brilliant to have done it. And we're in the tank. And by the way, our debt never goes away. This is something we're going to live with. It's up to 17 trillion and exploding. So we've spent all the money, we've borrowed all the money, and we're in the tank.
So that's central planning for you. An abject failure. It doesn't work. Now, it's very important to understand, as I pointed out recently, that when you have a rally like this on no news, now the supposed news is the tapering of the tapering talk. So supposedly we've had a couple of Fed officials back off of becoming more hawkish, and that is apparently the news that is driving things. But all of these arguments about tapering and all of these arguments about QE, of course, are really irrelevant to silver, because the silver market is so tiny that the trillions and trillions that have been printed are already out there. 7 trillion, as he pointed out, with no improvement whatsoever. So it is irrelevant, and the main thing is to understand when you see a move like this, especially today's move, on virtually no news, that's always going to be an important indicator, because that means that market players are taking positions and they know something that you don't know. Now, you, as Jesse Livermore points out, often you will find out later what the news was that they were acting on, but you don't know it at this point. That tends to be news that is legitimate and actually moves markets. So we're going to have to wait and find out what that news was, but we don't know at this point. Now, I wanted to go over to comparesilverprices.com. We've been watching the premium over spot very carefully, because that's going to be some indication, if that begins to compress, that we're starting to catch up with the silver price getting high enough for the dealers to make a profit and let that fall a little bit. So we've got Provident on the top and Gainesville second place. You can see here on our important category of the junk silver bags, we're still at quite a bit of premium. Now, the way to understand these charts is that the red line, of course, that is the price of silver, and you can see that it took off. The bag price went almost $100, but you can see as the price took off, we had a dramatic drop in the premium. Now, remember, that's a percentage premium, so you would expect that to drop if it was staying the same. So, for example, if you had a $3 above spot price and all of a sudden the price of silver explodes to the upside, you're going to see the premium percentage drop. What's interesting is as the price of silver spiked and stayed high, the price of the premium percentage dropped, but then started to stabilize and come up. So that actually means that the dollar amount of the premium that you're paying is starting to increase again. So you can see, same thing with the Silver Eagles. It took a drop, but then it came back. And as you go across here, same thing's happening in the Canadian Maple Leafs. The Philharmonics have almost caught back up. Here is the Buffalo Rounds. They are staying fairly low. And then here's the boxes of Silver Eagles. That percentage is almost caught back up. So the premiums on silver are staying high as a percentage. What that tells me is that even with this recent move, and we appear to be getting ready to move higher again, this is not what I will call a flag formation. This is something that I very rarely see in markets. This is kind of like an extended cup and saucer formation that seems to be forming here, and that would be kind of a double bullish signal. Normally your pennant formations, they have a falling type of direction, and this one doesn't have that at all. This is just a kind of a unique bull flag. So it may be quite possible that we could get a run at that 26 and $25 and $26 level actually tomorrow and Monday. That's how fast things can happen. And just let me take you back historically to show you in the daily. Now, we know how dramatic the moves can be to the downside, but it's also the case that there can be very, very dramatic moves to the upside. So you can see, if we zoom in on the daily, you can see you had a $2 move right here. You had a move right here from about $30.30 all the way up to $32. You had another move here, 28 or so, up to nearly 30. So it's not unusual in the silver market to get very large moves to the upside and as well as the downside. So it's quite possible that we could get another very large move just in a couple of days, and run right up here and test this $26 level. And then we'll have to wait and see what happens. And we'll talk to you next time.